technical analysis, down, 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 down. If we break above this one, you're like whoop, 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 whoop. That is like police car. Above 69, no longer bearish on the short term at least. So right now you have full throttle downtown. Everything is great. Everything is normal, and we still have to go all. Oops, what on earth did I do now? We have to go all the way up to here, 71, to find the resistance for this trend. So all good and go. All good and go. The Aussie yen. Bearish, falls. Don't let yourself get scared of this COVID thing. Okay? If this is what makes you trade, sure, have fun with it. I am not going to be the one that you shouldn't, but do remember, the first moment the market believes we are going to be, or there's no threat anymore, well before the news think is not a threat anymore, the market will reverse. So, how do you know that, Ivan? Well, if you look at gold went up on Friday on the news and is now down below. So that risk is kind of already wiped out. On yens, it seems like yen needed a retracement because it was very, very bearish. But is it really bullish? No, not really. It's just that the other pairs are very bearish. Now that's going to end at some point. I have not seen the latest COT data, and the COT data, as far as I know, is still not arrived for the Chicago Board Mercantile long opening new. I still haven't seen any. Still 16th of November. It's supposed to be 23rd. It still hasn't come out what positions people have taken, but it's still range bound. Just so you all understand. And this one can continue falling. And this can continue rising. So I want this to fall. I don't know if I'm going to have it this year, but I want to. So I'm just going to be patient.
One of the most important things I think that I used to slip up on, and a lot of traders slip up on as well, is the patience, right? Because we all want to pass this first stage quickly, and it's the same for the second one. But 30 days is actually not a bad period of time. So because I'm more of a selective trader, I use 2% risk on my trades, which means, obviously, if I get a decent 3-1 or 4-1 R, which doesn't often happen with my strategy, then you're getting close to that. Okay, so knowing what type of trader you are will also help. So if you are a little bit selective, maybe on this challenges moving up to a little bit of a higher risk may help you. You know, if you're a scalper, slightly different. But one thing that you have to do, and this is very important psychology-wise, is get it in your mind about the free repeat, okay? Because the reason I say that, I must have failed about 20 challenges. Honest to God, must have failed about 20, and I was doing them before I was ready because I was so focused on passing them. So let's say I start my challenge and I lose 1 or 2 trades. Okay, it could be down 2%, 3%, 4%. That 10% becomes quite a bit of an Everest compared to just saying, right, I just want a free repeat. I just need 0.01%. And the first 100K challenge I passed, I was down 4%. So I was down 4%. But I was just focusing myself on, okay, let me get that free repeat. And then, like I said, in the last week, the last couple of days, you can just go for it. Just go for it. But you don't want to be wasting money like I did, spending thousands and thousands of dollars trying to get that 10% when you don't need to do that. Get your 1%, 2%, 3%, and then have a little bit of fun and see how you do. Now, the second stage, I believe psychology comes into potentially a little bit more. I'll go into the charts long in a second. I just want to get through these next 2 stages and I'll go into the chart. Because we've passed the hard one And again, there is that want and that need to pass this second stage because it is easier. I mean, it's half as easy, technically. You've got more days and less percentage. There's that ultimate need to try and pass this quickly. But you have to remember, you have lots of time. So that's one of the tips that I always give when somebody asks me is that, remember, you have got a decent amount of time to get 5%. If you're risking 2, like I do, if you're risking 2%, you know, you could do that on one trade. And you don't want to get into the first week. You know, you don't want to get into the first... Oh, I just lost... Sorry, I'm reading your comments. You don't want to get in the first week and blow this because you're trying to pass it too quickly.
What is these double tops? What does price have to do when we see double tops? Price has to break because these double tops are worth nothing unless the market breaks through the confirmation point. And so what is the confirmation point? It is this low right here, the lowest point between the two peaks. All right. So this is the lowest point right here. Now, if we go ahead and put in a line across that lower point right there, then that is going to be our support level. But this is also referred to as our confirmation point. Okay, so we got our, and let me just change this to red. So we've got the two peaks, we've got a support level right here, which is our confirmation point, and now we have price actually bouncing off that, which means, traders, that if we do not trade below this, then these double tops are just double tops, and these are double bottoms, which are just double bottoms. And that means that if we have double bottoms and double tops, we're just really range bound, and we're not really going to see a market break out of this confirmation point. And so not one of these tops will or tops and bottoms will actually confirm that we're going in a certain direction. And so it means that we're just range bound. So, and why is this important? Well, because if the markets create double tops and price breaks out of the confirmation point, the distance from the double tops to the valley here is going to be the distance of the breakout. So that's why it's important. So if the market does break out to the downside right here, we can identify where price is going to move to based on this distance right here. And we'll also use swing analysis in order to be able to identify and confirm that too. And so as I look at the setup right here, I look at this and I go, okay, well, let's take a look and see what can the market do, all right, that could bring us back to a level of resistance without getting to the top and actually start fulfilling this downward move. Well, I'm going to do this. Because we have the double tops right here, I'm going to suspect that price is going to start working its way back up, but I am going to go ahead and start anticipating that this is a large swing right here. Now, what I probably need to do here to be absolutely, I won't say real, but I want to be as clear, but also I want to be as true to my trading rules as I possibly can. So what I want to do here is, before I go ahead and start looking at this as a large swing, I do know that the market moves in waves. And if I look over here, I do notice that we had an inside wave 1, 2, 3, 4, and 5. So this means that this must be a wave from here. I'm going to just call it an A, B right here. And that means the price did pull back up, and now this is another swing down here. So let's go ahead and do this. Instead of creating this large swing, let's now go ahead and take a look at this swing right here. And now we'll notice here, as we look at this swing, that price comes back here, not to the pip, but comes to the 1.618 right here. So what does that mean? That means there's a good possibility that price is just in a short-term correction and will then go ahead and work its way back down towards the bottom here and possibly even break out. So
another thing is, within studying these patterns, I learned that you want to look for something where there's a bullish engulfing next to it or bearish engulfing, right? In this case, we're talking about an uptrend. So we're going to be looking for that bullish engulfing, right? So if we take a look at this area, you see there is a bullish engulfing next to it. Okay, so that checks off our list, right? So once again, we're looking for where price rallied up before that consolidation. You want to look into that area and find what was that last bearish candle and does it have that bullish engulfing next to it. So this would be that order block candle. So I'm going to take this away. So what I'm going to do is I'm going to put a line at the top of the candle, right? This black one, and then put a line at the bottom. And yes, you do include the wicks. Okay. So with that said, this would be our zone. So I'm going to just use my rectangular box just so I can bring that zone over, just like so, top and bottom of that candle. So let's come back over here. Now we have our order block, right? So if I zoom out, now we have our order block. So I'm going to type order block here just so you can see it. And again, this is just a simple way for beginners to find order blocks. There it is right here. So we're waiting for price to trend down into this area and bank off of it, right? So I'm going to put this in play. Okay, bang. So we have a touch right here. Okay, so this is where I would put a buy limit order, right? On this line right here would be my buy limit order. And the way that would look is like this. Okay, and if you don't know what buy limit is, just to go over the orders real quick, market orders is where price currently is, right? And typically you may get in a couple pips above or a couple pips below, depends on your spread, right? The market order is where price currently is. Okay, a limit order is kind of like you saying, okay, I see price trending down, I'm going to put a limit order right here, right? It's a pending order. So it doesn't get opened unless price touches it. Okay, so it's a pending order. So you would put a buy limit here. It's an order where you think price is going to bank off of it and continue the opposite direction. So that's what a buy limit is.